folks, the market's fallen big time. A lot of people want to know what's going on. Why is this happening in the market? I'm going to take you through all that. We're just going to jump into it as always and kind of my perspective on this, what to look out for over the next couple days and kind of those sorts of things. Okay. First off, Russian ruble plunges nearly 30% against the dollar amid sanctions over the Ukraine invasion. The ruble was trading as low as 119 per dollar as offshore trading started Monday morning during Asia hours, from nearly 84 per dollar per the previous day. So, oh my gosh, okay, the ruble just went pew. Now, very important, a couple things, okay? First is, when you see something like this, understand these are the type of things that are going to cause a lot more volatility in this market. When you see the Russian ruble plunge 30%, that is so far from a natural move. I can't even explain it. Like, this isn't stuff that just happens all the time or something like that. So when you have this, the market's going to shake around. It's going to freak a lot of people out. A lot of folks are going to look at this. The computers, and we always talk about the algorithms and computer trading and those sorts of things that aren't even dictated by a human, right? I mean, at the end of the day, when you see this sort of headline, it basically shows you the market's way out of whack right now. Second part is, if you are somebody that, let's say you're a very, very sophisticated trader, right? You maybe a fund or whatever, right? Very, very sophisticated. And when I say very, very sophisticated, I'm not just talking about stocks. You also know bonds very well. You also know currencies very well. Well, guess where the real opportunity is if you're a trader right now? It's actually not in the stock market. It's actually in the currency market right now. That's where a tremendous amount of opportunity. So I would bet you any money that a lot of fund managers and a lot of, let's call them more sophisticated traders are actually spending their time right now in the currencies market if they know it very well. Because, yeah, when you have these sorts of moves, whenever you see massive volatility, just understand there's a lot of money being lost and a lot of money being made. And traders are going to go to whatever's the most volatile at a particular time. And if that means the currency market's crazy right now, that's where they're going to flood to, because that's where that opportunity is, okay? And so that is something that just gets everybody going. Kind of like, what else gets everybody going is 5 free stocks from Mumu. Check out pinned comment down there as always, guys. NASDAQ futures are tanking huge. Everybody's looking at this like, oh my gosh, man. Thought we were on the comeback. It was green days the last few trading days, and now we're red again. Oh my gosh, okay? I'll explain to you in just a moment why futures are so down right now, okay? S&P 500 also down 2.35%. We're also in early trading, so do keep that in mind. This market could get a little better. It could also get a lot worse over the next several hours before the market opens. But oil, okay? And if you want to know why the market's dropping drastically, it's because oil just went up massively. And anytime oil's going spiking high right now, it wants to downtrend the market. Now, usually if oil's going up, the market kind of goes up. If oil's going down, the market kind of goes down. But I can tell you right now, we're not in that sort of market right now. If folks are looking at this and like, oil's going up so much. So they're thinking about it in a couple of respects, right? The first respect is they're thinking, my gosh, oil's going up so much. Transportation of everything goes up so much, right? And it creates a much worse situation if you're transporting any goods, which, let's be honest, almost every single company, unless they're a fully digital company, has to transport items. So earnings end up getting hit in that sort of situation, right? Because somebody's paying for higher gas prices at the end of the day, right? Second thing people think about is the consumer. The consumer's hurt, okay? And there's a third component that's even more important, okay? Second component is the consumer's hurt. So if you get, 95% plus of people still drive internal combustion engines, if not like 98% plus of people, right? So being that we're still in an environment where most folks drive internal combustion engines, they have to go to the gas station and they have to fill up their car with gas. That is how they get around, okay? And if they're not driving their own car, then they might be getting an Uber ride, which guess what? All the Uber drivers, like 99% of them, also drive internal combustion engines, okay? So don't matter what, you're paying for higher gas prices. And if you're paying for higher gas prices, it's less money that you have to go spend at the restaurant or the mall or this place or that place, right? So that's the second thing. It's basically just an increased tax on consumers. And we're in February right now. Like, where do you think oil prices could be in 3 months from now or 4 months from now? Let's hope lower, but usually what you should expect is oil prices ramp up as you go into springtime and get ready to go into summertime, essentially. That's usually what happens. Doesn't mean that's absolutely what's going to happen this year. That's just how it usually rolls, okay? But the third thing's actually more important for the market, okay? And what that is everybody's been talking about inflation. Well, if you all of a sudden you're talking about higher oil prices, higher gas prices, guess what? That's another thing that can hurt those inflation numbers and make inflation numbers look really, really bad over the next couple months. And like I said, we still got this month, February, and next month, March, we still got very tough comps. After that, I'm not even worried about inflation in terms of the rate of increase. It's going to come down massively. April and after, I'm feeling pretty darn confident, okay? But for February and March, I'm not feeling confident. And if you're talking about gasoline prices being very, very expensive for the next, for right now and for the next, month or so, it's going to make inflation numbers look really bad. And that's what makes the market say, oh my gosh, the Fed is going to raise rates 7-8 times this year because inflation's going up so much. And so we might not get that breather. We shouldn't, in my opinion, guys, don't expect a breather on inflation in terms of the rate of increase until April. But the market might sometimes hope like maybe we're going to get a little breather here. If oil prices keep going up, then it's going to be hard to get a breather because that's just going to hurt all those inflation numbers. And they try to, make it look as good as possible. But I can tell you that's not good. And that's a scary thing for the market because, market's basically kind of priced in 7 rate hikes. But if oil just keeps going up and up and up, it's going to make the inflation numbers look even worse over the next 1 to 2 months. Okay. So that's not a good situation at all, right? Now, you got this. Putin orders Russian nuclear deterrence forces on high alert. So, we talked about the machines, the algorithms, right? This is another one of those things that if you're talking about getting everybody going, getting the machines going, right? The algorithms, reading headlines like that, it's not good. It's not good for the market, okay? Whenever you hear Russian and nuclear in the same sentence, believe me, the algos are going to get scared. You know who else is going to get scared? Not just the machines, but the humans as well. Because humans, whenever the humans hear Russia, nuclear, people get freaked out whenever they hear that and they're like, what's going to transpire here? And so it's just another factor on why I think futures are tanking here because you obviously got oil situation, the many various things that happen there. But then you got this, that's a tough buy situation. What algorithms out there seeing oil, spike way high and sees Russian nuclear something in a headline and it's like, ain't gonna buy. No, that doesn't happen, okay? And so, nonetheless, futures are... Now, keep this in mind, okay? I want to explain something, right? So, in Friday's video, I explained to folks, don't expect this Russia situation to be over. Just because the market went up 2 straight days, I said, don't expect that this thing's over by any stretch of the imagination. It can get far worse. The headlines can get worse and those sorts of things. I try to explain that to folks. And here we are in this situation where the market was obviously massively green on Friday. The market had one of the biggest turns in the history of the stock market in terms of the NASDAQ happened on Thursday. Thursday, everybody thought, market's going to be down 3 to 5%. And the market ended up being, the NASDAQ was up 3+% and it had over a 5% intraday, which was ridiculous, okay? Then everybody said, okay, well, sure, Thursday was good, but you know what? That was just a fake out day. Friday's going to be down huge. And then the Dow goes up 830 something points. The Russell's up 2+%. And everybody's like, what? How did this just happen? Are you kidding me? You got to be flipping my flapjacks, right? So now the thing is like Monday. Okay, well, yeah, it went up Thursday, went up Friday. Monday's the bad day. And so everybody starts thinking that. Now, keep this in mind. Just because futures are tanking down doesn't mean you can't have a third comeback, okay? And I know that sounds ridiculous to even try to conceptualize, but futures were massively down, when I went to bed, which is super late, like 3 a.m., on going into Friday, massively down. And guess what? We turned massively green. Thursday, futures were awful. I mean, awful. And we completely turned the market during that trading day. And so, can it happen a third time? Probably unlikely, but it could happen. And so just don't be shocked if it does happen again. Because you kind of get in this market here where everybody's like, okay, the next day it has to be down huge. It's kind of like playing roulette. I don't know if you guys ever played roulette before in Vegas, and you see it come up on one color like 7 times in a row, and it's like, it comes up red every time. This has got to be the time it comes up on black. At least that's my thought process. And it's still like 49-49, and then you got the greens out there. And then you end up playing black and it still doesn't come up. And you're like, no, how is this possible? Okay. And that's kind of what you get into a market. If it turns green again tomorrow, everybody's brains are going to be completely fried because they're like, how could this have just happened to us 3 days in a row, essentially, right? VIX is likely going to spike way up tomorrow, regardless of how the market is. Regardless if the market does somehow turn or even if it's a bad day. VIX, expect that a big spike there in the volatility index. Okay, no, we got all these earnings coming this week, and I talked about this on a video I released this morning. So massive amounts of earnings coming in, and the thing with these earnings is they're not. Most of these companies aren't super important for the overall market in terms of how the indexes move. But you know who they are important to? The retail investors, because a lot of these stocks are heavy retail names. You got Lucid, you have Zoom, you have Smile Direct Club, you have SoFi, you have AMC, you have Workhorse, you have Lordstown Motors, Plug Power, Wish, Dutch Bros, Bionanogenomics, Celsius Beverage, ChargePoint. Are you kidding me? Okay. I mean, you want to talk about a big week for the retail investor crowd. It is this week. This is like the Super Bowl week for folks, okay? And so that's just another element in this market that you gotta pay attention to, okay? Now, in my opinion, like what's the approach in this sort of market? Like, how should you be approaching a market like this that is very, very volatile, okay? So the first thing is, don't in a volatile market, a lot of things aren't going to make sense in the short term, right? It's not going to make any sense to you. You're going to hear, oh my gosh, Russia invades Ukraine. That means, because the amount of people that I know that are actually really smart individuals, but said if Russia goes into Ukraine, the S&P is going to fall 5 to 10% over the next several weeks. Okay, the amount of people that said that is like a huge number. Well, guess what? Now we're already up since the invasion happened. All the indexes are up 3 to 6% already. Okay, so now we got to fall a ton over the next couple of weeks just to get that 5 to 10% number, if that's even going to happen. And so don't like magically hope that certain things are going to happen or certain things are going to play out certain ways, because it's going to go to baffle a lot of people's minds, and they're like, wait, how does this even happen? Now, in regards to like the Russia situation, if there is any sort of de-escalation, which there's a little, snippets here and there about a possible de-escalation. Some folks might not even like that in the market. And the reason being is a lot of folks are still looking at this now. When I say folks, I'm talking about hedge funds, institutional investors, just individual investors. They're looking at it and they're saying, okay, if the Fed's in a situation where they're thinking about raising rates 5, 6, 7, 8 times this year, but then you get this Russia situation, that kind of makes the Fed kind of have to be less aggressive, right? And if this Russia thing still goes on for, let's say, several weeks, several months of drama, then the Fed has to be less aggressive. But if this comes to a conclusion rather quick, let's say in a month or two, and there's some deal worked out and Russia pulls back, a lot of folks might look at that and they say, oh boy, the Fed could easily still raise just as many times as they were before, because there's not that fear in the market. And so this is one of those factors. It's like, okay, do you want this war to go on, or for the market's sake, right? Do they want this war to go on because it might slow down the Fed, but then the flip side is, if this continues on, it's a bunch more uncertainty in the market, right? And so the market can be very confused at given times, because it's almost like anything that happens in the market, it can be looked at glass half empty or half full. And it's just like, how do you want to look at this, okay? Is it like, well, if Russia continues on, the Fed slows how many times they raise rates, and that might be a good thing for the market. But if that continues on, it also creates a ton more uncertainty in the market and could likely continue to spike oil prices, gas prices, which end up hitting consumers directly, and in a time when inflation's already killing consumers. And so do you want to really like spike oil to $100-something? Do you want to spike gasoline prices to $4+ a gallon across the entire United States of America? Do you want to spike oil prices and gas prices in Europe as well? Do you want to hurt the consumer even more than they're already being hurt? And so these are some factors I think the market's having to try to digest. All these pluses and minuses, all these things. And that's why you're getting so much volatility in this market. And you don't automatically think like because certain things should be bad news, that they will be taken as bad news by the market, because they could very easily flip that into good news. And the same exact thing works on the other side. And we've seen this time and time again with stocks, with the market in general, where we're like, this should be seen as good news for the market. This should be seen as good news for the stock. And what do? They somehow will flip that into bad news. And we're like, how did they do this? Is that some sort of magic trick? They just flipped this whole thing and now all of a sudden this is bad news now? Are you kidding me? And so don't get too tied up into that. And so, when I look at the market, right, I think about it like this, right? If you see stocks you love, that are certain prices, you have to just be willing to buy those stocks in a disciplined fashion. You can't go all in one day or 1 week or even 1 month for that matter because you're like, oh, now we're going to make a big move. That's usually a misstep. And you know what else is a misstep is also sitting on your hands and you're like, there's a lot of volatility in the market right now. There's a lot of shaking around, so I can't really buy anything right now, okay? That's also another misstep in this sort of market because there's a lot of stocks that are heavily damaged in this market. And I understand, Warren Buffett's shareholder letter, I was reading through that, and, he was saying, they're having trouble finding great deals in the market. Now, first off, I don't know when that was written. It just got released, but maybe he wrote that back in the end of December. Maybe he wrote that at the beginning of January before the market's fallen a lot. But also remember, Berkshire Hathaway and Warren Buffett, they're looking for the big one, right? They're looking for the big deal. They're looking for the next giant corporation to invest in, right? Because they're looking to invest billions or tens of billions of dollars. So when we look at all these small caps that are falling 60, 70, 80, 90%, Buffett's not even considering those. That's not even in Berkshire. Berkshire can't consider some $1 billion market cap. Berkshire nowadays can't consider some $5 billion market cap, $2 billion. That's a joke. If anything, they would just want to buy out the whole company. If that was a situation, they're not looking to make deals like that. They're looking at big guys. They're looking at big tech, or not even really big tech so much. They might look at a few big techs, but they're looking at big companies. And a lot of big companies aren't trading that dang cheap. And I think Berkshire might even be looking at a lot of the oil and gas stocks and kind of be thinking, okay, well, oil and gas stocks doing really well right now, but they've been kind of tricked by that a few times in the past where those oil and gas stocks, they go through these big boom and bust cycles where oil prices are going up and they're printing money left and right. And next thing you know, the market flips and some of those companies go from crazy profits to crazy losses. And it'll happen in like a 24-month span. That's what happens in a commoditized industry. So maybe they can't even look at deals like that, right? And so you don't want to get too tied up into this, trying to time it out perfectly or whatever. If you see some deals in the market and you like blah, blah, blah stock, you like, I don't know, let's use PayPal as an example, right? You like PayPal at such and such price. You like Facebook at such and such price. You got to be willing to invest in those even in the face of massive volatility. The trick is you just don't want to, put all your money all in one day or something like that because, that also usually doesn't end well either, guys. So yeah, that's my 2 cents. You got to invest in a disciplined fashion in this sort of market. And don't let whatever's going on in the market short term dictate what you're going to do with your money. You just got to make the moves that you think are the right moves to make out there, guys. So hope you enjoyed this. As always, we got a crazy amount of volatility in this market. It's going to probably remain crazy for a while. Make sure to subscribe to the channel if you're not already. There's a lot coming over this week, guys. I can tell you that much. It's going to be a busy week. Much love and have a great day.